Hello, everybody, and welcome to Hash Rate. My guest today is James Ross of Subnet 50 Synth. Hello, James. How you doing, dude?
Great. I'm very excited to be here.
I'm very excited to have you. So we're very excited to learn all about Synth. So why don't we just jump right into it? What is Synth? What are you guys doing?
So Synth is a subnet, which essentially gets miners to submit Monte Carlo simulations for price forecasts for crypto, soon commodities, and equities also are in the pipeline. So essentially, I think the way you can think about Synth is it's doing forecasting, but it's not saying the price of Bitcoin will be X, like 112,000 next week. It's saying, here's the potential paths of the Bitcoin price based on our analysis at the time now. And this is the range of prices that Bitcoin can trade between. And this is the probability distribution that the prices will go down these certain paths.
So there's like a cone coming out from the present, and
Exactly.
the cone is like a probability cone, right?
Exactly.
And you have these like bands within the cone, and you're like, well, we think the price has a 60% chance of being in the inner cone, and maybe an 80% chance of being in like this outer cone where it becomes worth a lot more, or maybe even a lot less, right? So that's basically what you're saying. So
exactly.
So you say that's different from the way most people do it. Do most people sort of approach the future prediction problem differently? They don't use sort of that cone view?
So I think using like probabilistic forecasts is fairly novel. And this type of like Monte Carlo simulations, it's used a lot for things like options pricing.
What is Monte Carlo? Sorry, I don't know what a Monte Carlo simulation is. Can you just back up and what is that in general?
Yeah, so Monte Carlo simulations are where you essentially simulate future possibilities. So a number of future possibilities versus just, one price path for the future. So, you can kind of base models on a few different things when you're building out, forecasting models. You can base them on certain signals. So this is pretty common for some other subnets. They use signals, whether someone should go long, short, or they have signals on like the specific price of the asset at a certain time. But what we're trying to do and what we're scoring people on is not like, are they getting the exact right price, but how good is their distribution or their probabilistic understanding of the future price. And this is useful for a number of things, but that's like the key difference with how we're approaching this problem. We think that you can model volatility and people can get better at modeling volatility. And so, that's what Synth does.
So it's actually, so you're basically grading miners, the predictors, based on sort of like how well are your abilities to predict within a range, as opposed to actually getting the exact price prediction correct. So, right, like it's more sort of fuzzy, which which sort of it feels like it fits in with Yuma consensus quite well, right? Like it would feel like those two things are, I don't know, it seems like their energy meshes well together. Is that correct?
Yeah, I think it's a similar line of thinking for sure.
Yeah. Okay. And so you guys you're only doing crypto right now?
Yeah. So we have BTC and ETH, and we'll be adding commodities and equities, and potentially other assets in the future. I actually just put a tweet out today saying, what do people want to see next? For us, it's very much going to be like based on demand. And we've already seen some demand from some like more traditional finance institutions around SPX, SPY, so S&P 500, as like an asset to measure. NVIDIA recently has become popular, a lot of volume being traded there. Google, of course, it had like a bit of a drop recently, so people are interested in modeling that out. So also gold is quite a nice asset to model because it trades over like a longer time frame than equities. So that could potentially be a bit easier for us to add into our competition for miners and score. But yeah, crypto is obviously great because it's 24/7 market is ongoing.
Yeah. So you only do Bitcoin and Ethereum right now. Those are the only two. Yeah. Okay.
Yeah. We've had a few requests for TAO too.
I'm like, it would seem like the obvious, like, what do you guys want? Well, what, I don't know. We're a bunch of TAO traders. Of course we want TAO, right? And then of course we want subnet tokens, right?
Yeah.
So I was talking to a friend of mine. A friend of mine is sort of like one of these volatility trader people, right? Like I'll invest in something long term and it'll either work or it won't, right? But she will. She's basically one of those Fibonacci kind of people, right? Who's like, basically doing the astrology. It looks like astrology to me, right? Yeah. And basically can predict usually, which it makes money on the volatility and very short in and out hops, right? And what she tells me is that the DTAO subnet token universe right now, because it's hard to get into, right? Like it's hard to trade subnet tokens. There is no leverage. There's no there's only spot trading, right? And you have to be inside the TAO universe to do it on the TAO chain. There's no leverage. There's no liquidations, which can suddenly cause everything to jump down or jump up, right? Kind of depending on the direction. So her usual astrology, which is kind of hard to do on Bitcoin and Ethereum because there's so much leverage and other unpredictable factors, the DTAO universe is highly predictable. So it's like, she's Harry Seldon and her psychohistory works extremely, extremely well, better than normal inside a DTAO. Would your stuff work better with DTAO tokens, do you think?
I think that I think they're fairly hard to model because they're almost like too volatile right now because it's so early. Like the volatility on the DTAO tokens can be pretty extreme. Or like modeling like potential volatility, it can be pretty extreme. Like there can easily be like 20, 30, 40, 50% changes in the price in a day. I mean, it can definitely be modeled, but I think, it's a bit too early on. Maybe some of the bigger ones, it would be interesting to model. But TAO as an asset is definitely something which would be really interesting to model for sure. Yeah.
I mean, I add my voice to the request for TAO for sure.
Yeah.
So how do people get access to your I'm going to call them predictions. I don't know if they're exactly predictions, but how do I get access to what your subnet is telling us what the future will be?
Yeah, so we have a load of data dashboards available to the public. They're on our website, synthdata.co. So we have a volatility dashboard that forecasts future volatility, and then also shows like how good our volatility forecasts from our top miners are versus the last 24 hours of volatility. So that can be quite interesting to look at. We have a dashboard on liquidation probabilities, which is essentially like the probability the price of an asset would change 1%, 2%, 3%, 4%, 5%, etc. This is like pretty useful for managing risk for people who trade perps, things like that.
Is it that you basically measure how much leverage is in the system and what the probability? Like we had this one guy like a week ago who levered up $100 million on Bitcoin at 40x leverage, right?
Yeah.
And he got liquidated. And he was really mouthy about it too. He's like, come on, motherfuckers, come liquidate me. Like he was saying shit like this on Twitter. And I'm like watching this going like, you're going to get killed. You're going to die. It's going to happen. And lo and behold, he got liquidated, right?
Yeah.
So you see that in the system and you predict like the probability with which that guy's going to get liquidated.
Yeah, absolutely. Like predicting the probability of price moves, like 1% price moves over like a 4, 8, 12 hour time period is like, it's very possible to do. And I mean, we were watching like these like liquidation probabilities and watching this guy who had these traders who have these crazy positions. And we're like, wow, like their risk management seems pretty bad. I mean, they obviously know something because they've built up their portfolio to like, yeah, this guy had like 100 mil at one point, right? So he obviously is smart, but then you're watching like the risk management and you're like, this is getting like too close for comfort. You would expect most like pro traders, when there's a high probability of getting liquidated, they would close the trade out early.
One would think.
One would think. And that's what like we're really trying to do with this data, is tell people like, hey, there's now like a 80% chance you'll get liquidated in the next 12 hours. So it's probably best for you to not leave your laptop and to put like a stop loss on and just like, don't go like taking a flight or, go to sleep right now, because
you'll get liquidated. A lot of
volatility. Yeah. And we see that like, I guess like the most common patterns typically in crypto is like Sunday nights, there's generally lower volatility than like Monday mornings. Monday morning, like Eastern time, right? That's like generally a high volatility time. US is waking up. Asia's like, closing out. So that's like usually a very high volatility time. So there's like, there's kind of general things you can see in the data which are useful, but then also like more specific things that can like help traders, understand how to manage risk. So like they might close a position when there's like a 50% chance of liquidation. They might say, okay, that's the point we close the position. But not if you're this guy who had $100 million. Apparently, you just keep powering through.
Oh, that poor bastard! I felt so bad. I mean, I felt bad for him, but I also didn't feel bad for him, right? Like he was clearly incredibly foolish, right? So
and he was really documenting it like every few hours, like updating everyone. I think the thing that's interesting when you watch like these type of traders, I mean, usually they don't make that many trades. He was pretty active, like making a load of trades, which is rare. Someone like with that size, doesn't usually like trade so actively on like such high leverage, right? People who have like tens of millions of dollars and, are putting positions on of that size usually take time. They scale in, they wait.
They're more sober about it. They're more sort of dollar cost average-ish about it, right? Yeah, I've watched. I actually, there's a guy named Sifu. Have you ever heard of this guy?
Sifu, no I haven't.
Sifu. Yeah, so Sifu, sort of a notorious figure in some crypto circles. He basically was involved in the whole Wonderland time thing with Daniele Sestigali, and he was basically the CFO of Wonderland. And he was managing the portfolio, and it came out later that he was one of the Quadriga guys who had been convicted of felony. So that was the bad thing, right? And that was not disclosed to the Wonderland people. However, he was out, he served his time, and he hasn't done anything since. And the flip side of that is he's actually an insanely good trader. He turned like $2 million into something like 70 million during DeFi summer. Right, so he actually, he has a proven ability to manage treasuries, and it was really the lack of disclosure that was the guy managing the Wonderland treasury that hurt time in Wonderland the most. It wasn't really anyone objected to him, right? It was people objected to the non-disclosure. But anyway, that guy, I've monitored his trades to try to learn from him, and he was for a long time he was shorting ETH. As ETH kept rising and he kept getting liquidated. And but he managed. He did what you said. He sort of scaled in, scaled back, scaled out, and he was sort of measured and more scientific about it. So that was sort of his trading style. So anyway, these people. What will we do with them?
It's tough as well to always know like the full picture. Because you never know, like, are they hedging their position somewhere else? Like, is this a bigger play for something else? It's difficult to know, but like. So
your predictions are public. Like, you don't have to pay any money to get them. It's just sort of publicly available. Anybody can go look.
Yeah, they're publicly available.
Oh, that's cool. I didn't know that. I'm going to actually go look after this is over.
Yeah.
I'll be watching.
Synth.co. They're available, and we have like this meta model of the top 10 miners. that we share. So it's like, a combination of the top 10 miners forecast.
So an average of, because you basically, so the miners, so let's talk about that for a second. So like all the subnets are effectively like these Hunger Games like contests where, 250-ish, kind of depending on the subnet, miners are all competing for the alpha emissions and the tau emissions that are being produced by the chain. And whoever does the best wins the most is kind of the way it's supposed to work, right? So how does your contest work? Because you have all these miners each making their own predictions. Do you average them, and that's what's presented to the end user? Just tell me a little bit about how that works.
Yeah. So essentially, the way the competition works is we use this like continuous probability score, like rank probability scoring system. Okay, so like this function, and we're scoring miners on the next 24 hours of predictions every hour, and they're submitting like tens of thousands of data points to us every hour. So the subnet gets really like a huge amount of data. I think there's like 160 million data points per day.
Wow.
Which are like being created by these miners. And we're measuring both for like the calibration, like how well the probabilities, like how well these forecasts match like the actual outcomes, and also how concentrated the distribution is around like the actual price movements. So when we have this, we can either decide to display like the forecast from the top miner for the last 24-hour period. Yep. The miner that had the best CRPS score, or we can do like a combination of miners. We could do the top 3, the top 5, the top 10. So currently, most of like the public data is based on like this meta model of the top 10 miners. However, we have an API that like more enterprise customers are starting to access, and they can choose to have predictions on one specific miner, a combination of miners. The API like has more flexibility for them to do things like back testing with this data. But our public dashboards all use this like meta model of the top 10 miners.
And so you spoke about two things that are involved with your mining operation. One is it sounded like data collection. So basically, like, what are you basing your predictions on? And I think you said like there's 160 million in total of all the miners' data points that they're collecting. And maybe it's like, the price of pork bellies, like who knows why, but maybe there's some relationship that humans can't see, but AI sees, right? That, if pork bellies goes up, Bitcoin goes down, like on average, who knows why, but that's just that's a pattern it notices. Yeah. Are the miners submitting the data points to other miners to consider? Are they sort of mixing streams or no? So I collect data and then I make a prediction. Is everybody doing that in their own silo, or are they all bringing their data and then they all analyze all the data and each arrive at independent predictions based on all the data?
Yeah. So every miner's submitting like these 100 paths, right? That they think the price will be.
Yep.
Okay. And we don't know what goes into them deciding on these 100 paths, right? We don't know their underlying model. So it could well be that a Bitcoiner, like someone has a model with the correlation of pork prices and Bitcoin, right? And that data, they could have billions of data points that go into creating these paths. This is
the only thing they're submitting is the paths.
The only thing they're submitting is the paths. Okay. Yeah, but the paths contain like hundreds of thousands of data points.
Got it. Okay, so that's what you were discussing.
With like the price every interval. Yeah. But the underlying models that go into creating this data, these data sets. So we know that some miners use things like news cycle data, social media data, historical data, different asset correlation data, or a combination of all of those to try and understand like future volatility. Because, as we're in a market, right, and there's millions of different forces and things that change the way the market works. So in theory, the more data they can collect, the better model they should have.
Yes.
but yeah, the underlying models we don't have access to, right? That's for the miners to submit. We only get the outputs.
Okay. Interesting. So so one of the other things I've sort of noticed in the, in the TAO universe, especially lately, there's PTN Subnet 8, which is also a prediction engine. Although from what you're telling me, I gather they do it quite differently. Their methodology is quite different from yours. And they actually are still sort of in the build phase of what they're doing, whereas you've sort of created something which is working today, albeit in sort of a narrow sliver of the prediction markets. It is a delivered product which you are iterating upon, sort of a MVP kind of thing. There was a negative reaction, shall we say, to PTN recently on novelty search. I think the feeling was it felt weird to me. But it was very clear that a lot of OGs in the Bittensor TAO space felt that these guys had sucked a lot of emissions out of TAO, and it had produced very little that they could, in their opinion, as opposed to relative to the amount of TAO that they had gotten, and so that was the reason why. What is I guess what I'm trying to figure out here is what is the difference between you and those guys? Why are you not getting that kind of negative reaction? Is it because you're newer? Is it because you've produced more? Is it because your methodology is different? Can you give me a little bit of a comparison between you and those guys?
Yeah. So I think that, so firstly, I think we're trying to solve two different problems.
Okay.
They're looking to have specific trading signals which power an application, I think called Glitch. I think it's Glitch.
Yep, Glitch
right?
Financial.
For a consumer retail audience, right?
Yep.
So it's an application millions of people can use, and they get these signals and these different trading strategies. Although Synth can provide these types of trading strategies, people can build trading strategies on top of Synth data. What we're trying to do is forecast future outcomes, which help people navigate markets, right? So our goal is not to power a financial application. Our goal is to power basically all financial markets. Give a data set, or we want to create data sets that can help people navigate volatility in any type of market for any type of asset. And our end customer is going to be potentially AIs, right? That's our core goal.
That's who you think is the customer, is an AI, not a person.
We want to create this data layer, which anyone can use and anyone can access. And it's the best and most powerful synthetic data layer to either train models on or train AI on, or to actually use to forecast the future. So our customer base is, I would say, more enterprise and more institutional. Also a lot of crypto native teams are plugging in Synth data, and there's a range of things people can do with the data. It's super versatile. You can plug it into lending protocols to help manage risk. You can plug it into exchanges. And so, I think the direction we're going is different from them. And also the products which we expect to be built on top of Synth are different from them. I think we're not so interested with helping retail traders make money. We're much more interested with in the future when an AI has a load of crypto, how are they going to manage that? We're interested about how can we get the smartest people in the world together to build the best models of the future, and how can those models become a fundamental layer that everyone can tap into to make smarter decisions.
Interesting. That's not at all what I expected you to say. So it's very much crafting it for AIs to consume, sort of like a chain link kind of thing, but of future price prediction for crypto assets now, but anything, stocks, whatever, DTAO, whatever later on.
Exactly.
Okay.
And I guess like we want to kind of go further. Like we could create like synthetic data for many different things, for things like traffic, right? To give like probabilistic answers to, when you say how long is it going to take me to get from A to B, instead of saying it's going to take 12 minutes, it will give like a distribution. There's like a 50% chance it will take 10 minutes, an 80% chance it will take 12 minutes.
Yeah.
Something like that, right? So we're trying to change the way, like, I guess people and this new like agent world consumes data to be able to train on like this abundance of synthetic data that we're creating. And then also to, I guess, plug into thinking more probabilistically about future outcomes and hopefully managing risk better. Being more successful in their activities and actions that they're doing.
And now, how accurate are these predictions? And I guess what I'm getting at is, I hate to bring up PTN again, but I will because I'm just more familiar with what they're doing. So when you ask them, what's the product that you're really selling, and the product that they're selling to their consumers via Glitch Financial eventually will be effectively 25% APY. Right, you can make 25% if you use our information to make your trades, and it's basically that's because of the accuracy of what they're predicting. Do you have a similar idea of how accurate your predictions are and what kind of API that can yield for your consumers of your information? Or is it just unknowable at the time? Go ahead.
Yeah, so we like want to benchmark. We're benchmarking ourselves against the geometric Brownian motion model, which is essentially like a volatility model. This is used for like things like options trading, options pricing. And we're currently outperforming that by roughly 25%. That's like our benchmark. So we want to continue. Like a month ago, we were like outperforming that by 20%. Now it's at 25%. So we want to keep improving on that benchmark because that's the benchmark that like our customers are using for the quality of their models. We actually spoke to one hedge fund recently and we're like, hey, do you want to are you interested to consume the data? Is this interesting you? Is this interesting for you to like build into your trading systems? And they're like, actually, like the founder was like, actually, I want to test our models. So I want to see how good we are compared to the miners on your subnet. He was like, so I find like a lot of value in knowing like, are we outperforming like the best miners or
yes,
are we not outperforming? Right. So if we're not outperforming, we're going to buy your data. But if we are, if we are outperforming, then we don't know if we're going to share it with the world. So it's interesting, but like that's very much our focus, like improving on these benchmarks month over month. And the way that like Bittensor's incentive mechanism works, it's like really helping us to do that. And we're seeing more and more miners emerge with better models like day over day. Like competition is like extremely fierce. And so, we're pretty excited. One thing that you can do with synth data is you can actually use it to mine other price prediction subnets. So we've been looking into that. And I think, synth can potentially also improve like the quality of other price prediction subnets we don't know yet. But that's another way that we can see like contribution to the ecosystem.
It's interesting to hear the way you speak about your product. So it's very different from other sort of price prediction systems. You keep talking about synthetic data, like you're like almost like you're ready AI, right? Like you're making synthetic data, which is then used to train AI models, which then in turn make predictions. So you describe in your literature synthetic price path, and I think you've used that term a couple times during this conversation. That is the synthetic data that is produced by your subnet, yes?
Yeah, exactly.
Yeah. Okay.
Like, I think that the approach that we take is that we have to, we like our team, we like drill into ourselves that like we don't know what the future is, and we want to create the best models of what the probabilistic outcome could be, right?
Yep.
And that's where we see like the value in this type of data. It gives like these really nice probabilistic models, and we want to change the way that people think. Like the top traders in the world, the top poker players, they all think in probabilities about every decision they make. And we want to basically create this, well, we've created this data layer which can now enable humans, AIs, to also think in this probabilistic way about the future.
Probability clouds. Like, exactly. Or like quantum mechanics, like, the proton is, the electron is like probably in this, we don't know the velocity, but it's in here somewhere.
Exactly.
Yeah. Or the time variance authority. That's the other one, the TVA in the Marvel universe, where they have like the branching universes. So you have like, the probability of the universe being X is like one of these branches, right? It's like somewhere in here. It's not here. It's somewhere in here.
Exactly. And can we get better at that, right? Can we get better at modeling uncertainty? And I think the thing that we found pretty hard at the beginning when we were like presenting this idea is it took a while to like explain that like modeling like Bitcoin and Ethereum like asset prices is like the beginning of us like trying to model uncertainty across like all markets. Because a lot of people just say, oh, your price prediction subnet, we have a few of those.
Right. That's kind of what I thought. That's
Some of them aren't that cool. And we're like, well, kind of, yeah, we are doing that, but we're also trying to like model this probabilistic future and model uncertainty. And we think there's like a lot of value, and this is like a huge, like this is like a mathematical problem to solve. And it's I think we're starting, like we did a novelty search call a few weeks back. We got like a really good response.
Yes, you did.
We've had like a really good response from like a lot of the community as they've kind of like dug in more and more to what we're doing and have started to see like the applications which are being built on top, the different use cases emerge from this type of data. Const really likes a scoring mechanism that we're using. And we've also got like really valuable feedback about like what we should do next, how we should improve the scoring, how we should improve like lots of different things. So yeah, it's been kind of awesome to like get over that initial like hurdle of like explaining to everyone like what we're trying to do, like our grand vision. And yeah, like have the support of the community now behind us, which has been awesome.
Yeah, you're not price prediction subnet, you're probability cloud technology subnet, right?
Yeah, exactly.
Which is why you call it Synth. You don't call it proprietary trading network. It's not about trading. It's not about prediction. It's about probability cloud management.
Exactly.
It's very Synth, captures that idea better. Yeah. Now it actually makes more sense, because I didn't understand why you called it Synth. I'm like, what's it called Synth? Like they're doing price prediction. Why is it Synth? Right. And so, okay. And which it's appropriately named, which you understand. And I understand why people, now that I've gone through sort of the thought path of, from what I thought it was to what it really is, I can understand why there's confusion at first and why that was difficult for you to kind of drill into people's craniums early on. My cranium resisted it as well at first. So
I mean,
I understand.
It's tough when we have like you said, like we have like 100 subnets. So like,
yeah, it's tough to keep up on what they're all doing. I'm doing it as fast as I can.
How are we meant to know? Like, how are we meant to deep dive on all of those? I mean, it's really tough.
Well, I'm trying to do it. That's why I do hash rate. I mean, this thing is turning into This Week in Subnet, so I should maybe even just rename it. But every once in a while, I like to do something not, just keep my brain, looking at everything, not just TAO. But it's like 80% TAO at this point. So
yeah.
So let's talk about who you are and what you were doing before all this. So I guess you grew out of something called Mode Network. What was that? Is there a relationship, and is that still running? And then tell me a little bit about yourself and, where you come from, where were you born? Are you an engineer? Like, how did you get here?
Yeah, absolutely. So I can maybe start. So I studied economics. I went to work in finance in London. I built a couple of different fintech companies. One of them was focused very much around like data analysis, and then got into crypto in like 2016, 17. Was kind of like, trying to figure it all out. I was working a lot with like teams in the Ethereum community early on, and then built a layer 2 network on Ethereum called Mode. Mode is still active, still running. And we spent a lot of time with Mode, like focused very much on like finance and AI. And this like naturally led us to like agents. And we were very much focused on like, okay, agents are going to be like big users of blockchains. Like they might even be like the biggest user of blockchains in the future. And we looked at like all the activities that agents on chain would do. So things like managing liquidity provision across protocols, like managing a portfolio, managing lending protocols. So you lend your BTC, you borrow assets against it, right? If the BTC drops, you need to like add more collateral, things like that. So we looked at all these different problems and we're like, okay, there's this data layer doesn't exist, right? That agents can tap into and humans can tap into to manage risk, to manage their portfolio, to manage their different strategies. So that led us to building Synth. And we'd actually, at one of like our demo days for Mode, Alla, one of the founders of Bittensor, came to speak about the idea of like this data layer within crypto emerging and how Bittensor and all these different subnets are like essentially solving all these different problems. And he did like a crazy good presentation. It was like, pretty phenomenal. I remember after this like demo day, everyone was like, who was that guy? Who was that guy? When like,
who was that masked man?
Founder of this like multi-billion-dollar network. So he's a pretty smart guy. And it was very impressive talk. And we spoke to him about like this problem we're trying to solve. Like there's these agent builders, but they don't have a good data layer. This is how we think it should be built. He gave us some feedback on like how he thought it should be built. That was really helpful. It was very constructive. We went away, looked at the scoring mechanism again, refined it. Sam, the other co-founder of Synth, he went away and spent a lot of time on like the math side. And then, we essentially went ahead and launched it. And Synth launched in January. And the current relationship between Mode and Synth is like, they're separate products. We have some of the same team across the products. But they're very much living like their own life. Mode actually uses Synth data in a couple of its products. Mode is like, it has an exchange. It's an L2. It has like an AI terminal. You can ask questions. You can query Synth data from there. But the way we see Synth is like kind of like this enterprise product with this like, I guess like the real product is like the API of all the miner outputs of all these models that we're seeing like a lot of demand from like a huge range of organizations. So from like traditional finance, it ranges from like, funds who are starting to get into like Bitcoin, Ethereum trading. They don't have these models already. We see big DeFi protocols who are currently already have similar types of models. They use like volatility models to think about risk management. We see individual traders that are using the data every day, like checking out the volatility pages we have. So we've got like this, pretty wide range or this pretty different customer base. And I would say right now the focus is much more on like bringing on enterprise style or enterprise customers who are looking to consume the API and build it into their systems right now.
Interesting. So, all right, let's shift gears and then we'll wrap up. So before we go, let's talk a little bit about TAO. There's a lot of discussion, especially on X today and over the weekend. Is TAO working? And I did a panel show on this like a week ago with three other folks. there's varying opinions on this. DTAO was supposed to democratize the direction, the directing of the flow of emissions to subnets that were producing the highest quality AI. Mm-hmm. And that has happened to a degree. To a degree, it's not. To a degree, things are getting the APY, which perhaps should not. Right. So TAO hash is one of those, a Bitcoin mining subnet. Some people are like, wait, that's like not AI. That's Bitcoin mining. That's stupid. Why are we like, this is an abuse of the system, right? And TAO hash very quickly became one of the largest market caps and, started sucking the most APY, or one of the highest APYs out of anybody in terms of TAO emissions and subnet token emissions, right? So some people would consider that a failure. Other people are like, no, that's great. That's the free market in action, and it's fantastic. It's producing revenue. That's a great example of what our incentivization network should be doing, right? Mm-hmm. So I'm gonna put it to you, and then other people. One last thought before I ask the question. Some people think the root APY is too high, right? Because we only have 7% of TAO participating in DTAO subnet tokens. So 93% of TAO is not participating, right? So why is that? Is there something wrong? Is that a sign of unhealth? And one theory is that people are hanging out, staking in root because they're making 25% APY effectively, give or take, given the day. And so there's no motivation to move it into subnets, because why would I do that? I'm making 25%. That's awesome. Mm-hmm. So in your opinion, is DTAO working, and is the root APY too high or not?
So I think that, we literally launched, I would say a month before DTAO. And at that time, when we were on testnet and stuff, we didn't know when DTAO was launching. We thought it would be later. And when we realized it was launching, we were like, oh, wow, okay, it's this is going to be fun. This is going to be interesting. And I think that Constant, the big dogs in Bittensor were very clear that this is a long-term game now, right? And value accrual to your subnet, value accrual to either your alpha token or the projects around your alpha token, right? The potential future value that can emerge from what's being built around your alpha token or what's being powered by your alpha token is what matters. The same as building any organization, right? You're either valued on revenue or potential revenue, potential growth. And they were very clear that this is a long-term game, and the winners will be the ones that consistently innovate and deliver value to the market. And I think what we've seen, or from my perspective, a lot of the pre-existing subnets, the first subnets, are the ones who are in the top positions, because they potentially had big supporters within the ecosystem, potentially even themselves supported their subnet alpha token price. That's okay. But I'm pretty sure that over the next 3 months, we'll see newer teams who are actively innovating and continuing to innovate rise up and take the top spots. I have no doubt about that. When it comes to the root staking APY, I think that the decay should be faster or slightly faster. So right now it's at 48%, and that's dropped from, I don't know what it was, but when it started, maybe it was 100%. I'm not sure, 80% or something.
Yeah, it was 100% when we started before DTAO.
Yeah.
Right?
So it should decay a lot faster, in my opinion. In the same way that take when they launched the EMA for emissions based on your market cap, it was actually meant to take quite a long time for your emissions to move relative to your market cap, but that was changed and shortened and reduced. Yes. So that as your market cap changes, the EMA was much shorter. So your emissions, if your market cap went up quickly, your emissions would follow quickly with I think it's a 20.
Yeah. So they added some inertia in there so that people couldn't just jack their price up real fast and get a ton of emissions real fast. Exactly. They might be like, no, we want to sit back and watch you for a little while and make sure this is a real pump, not a bullshit pump.
Exactly.
Yeah.
And I think like I saw someone mention on Twitter, like the top 100 wallets are staked in root. I think that's understandable. But I do think like that adding further pressure by reducing the APY faster than it's currently reducing would make more activity happen within subnets. And I think like, I think if we're talking about should the root staking APY, or should the emissions to root go to like 20% over like the next 3 months, 6 months, 12 months, I would say that I think it would be better if it moved to 20% over the next 3 months. And then like finds like a lower level. But again, like whether like the dynamic against that with the TAO staking APY, we don't know, because maybe like all the subnet prices like pump like crazy and less people stake, and then the staking APY goes up. So you constantly have this like balancing act. But yeah, I think emissions to root should reduce.
Yeah, I'm actually for more of a severe cut. I think the root is too damn high. That's kind of where I'm at. And what's the remedy for that? I think the root should be like 3%. Like, I think we should just do it tomorrow. That's my opinion. And it's taken me a little while to get there, to be honest. Yeah. But I think just over this past weekend is when I mentally turned the corner on it. I'm like, nah, it's time. And there was discussion this morning where Siam wrote a big long post on this topic. And actually JJ, who's another sort of big guy in the space, guy behind Tau Hash and a bunch of other things. Yeah. So controversial figure, but he was like, I don't think there's any problem at all. Like if you look at the trend lines, they're totally going right. Which I actually disagree with JJ on this. I don't usually disagree with JJ, but this time I do. So yeah, I think just, slash it down to 3%, kick the kids out of their parents' basement. They're sucking off there's a lot of complaining about, PTN and other people getting too much emissions. Well, I mean, this seems like a pretty clear case of welfare run amok, right? Like you're doing nothing. You shouldn't get stuff for doing nothing, right? That's an inefficiency in the network. So I think that's my opinion. We'll see if anybody else agrees with me. So far, the feeling seems to be do nothing amongst the intelligentsia of Bittensor. But we'll see. Maybe that'll change.
We'll see. Yeah. So I would try and meet halfway and say, maybe we can just speed it up a little bit.
Yeah, at least speed it up.
Yeah, at least speed it up. But I like that view. I mean, we need people. We need people to push on that view as well. I think it's really important.
I think I'm kind of there.
Yeah, that's cool.
Yeah, David Fields is really there. He's actually the guy who led the charge and sort of started the conversation of Subnet 33 ready AI, right? So, and then final question: what do you think about a 128 subnet freeze and subsequent deregistration and liquidation of subnets that are not performing? What do you think about that idea?
So when we initially registered, there was like this mad scramble to secure weights, so you didn't get deregistered. So this existed right before detail.
It did.
Before detail.
Yep.
And I feel that like everyone should go through that stress. I feel like it's a rite of passage as a subnet to compete. Like miners have to compete.
Right.
And they have to like constantly be performing. Otherwise they'll be cut. They'll get deregistered and new people will come in. So yeah, previously subnets had the same. And it was like good pressure. It meant that you had to really push to secure those weights, to like build that foundation to grow off. So I think that, there's nothing wrong with that. And 128 is a lot. Like, I don't think infinite numbers of subnets is necessarily like the right way to think about the future of Bittensor. Especially when there's like talk of subnets and all these different potential mechanisms that like individual subnets can use to scale out. I think that, having healthy competition is important. 128 subnet slots seems pretty reasonable. And if teams don't perform, then they should be deregistered.
So what you're saying is you need competition for capitalism to work.
Yeah.
So weird. Such a strange idea.
Extreme competition. Extreme.
Yeah, no, I without death, there's no evolution. That's just the way it works, unfortunately, right? So,
and like miners have to deal with it, so I think subnet owners should have to deal with it too.
Yeah, no, I think I'm kind of with you on that. So, I hadn't really thought it through the way you just put it, but I think you're correct. So, yeah, I mean, look, we're both arguing for increased competition ultimately.
Yeah.
So,
Yeah.
which is usually the correct answer, right? If you don't have competition, if you just have socialism and and everybody just sort of getting free handouts, nothing works. It all, things fall apart.
Absolutely.
Right? As Chinua Achebe would like to say, or actually that's Shakespeare initially, but whatever. I'm going to go with Achebe also. Things fall apart. So, so I think I'm for the 128 subnets. You get to register if your subnet's not performing. And if 128 is not enough, we don't let 1,000 flowers bloom. We let 128 bloom. And, and if you want to bloom, you have to kick out one of those other 128. Right. So it becomes like Highlander a little bit. Right. So there could be only one. Well, it could be only 128. There you go. So, all right. Well, we're coming up on the hour here, James. Is there, where can people find you online, or is there anything else you want to plug?
So they can find me. I'm on Twitter, JRossTreacher. It's kind of a long version of my name. But yeah, Synth Data.
Yeah, we'll put it in the show notes so people can see it.
Synth Data Co. And yeah, super excited to chat to anyone who's interested to use the data, integrate it into products, mine on the subnet, any validators that are looking to move into detail, always happy to chat with them, or investors. And there's a lot of cool products being built out of Synth. Some are also from Mode. So yeah, we're really excited about the future. And thanks so much for having me on.
My pleasure, James, and thank you so much for taking an hour and explaining it. I actually feel like I understand this so much better now, so this was super useful to me as well. So thank you once again. My name is Mark Jeffrey. This has been Hash Rate. We'll see you all next time.